Budgeting. We all know that we should do it, but it can be so discouraging. Like going on a diet. In this video, I'll give you 5 reasons why budgets so often frustratingly fail and solutions to fix them. Stay tuned. 5 reasons why budgets fail, coming up. It's Jeff Drayton, Certified Financial Planner Professional and founder of Jeffrey A. Drayton Financial Planning and Wealth Management, LLC. Here, I share my thoughts on financial planning topics for individuals and households. If you're watching this video on YouTube, don't forget to subscribe. And if you're viewing this from my website, fill out that sign-up form at the top of the blog page so that we can contact you when new content becomes available. Budgeting. There are few topics of greater importance to successful financial planning than this one. Some would say it is the cornerstone. And whether your income is 5 figures or 7, failing to have a firm grip on your cash flow can spell financial disaster. Today, I'm going to look at 5 reasons why budgets fail and ways to fix them. But before I do that, I want to define some terms. You know, financial planners frequently speak of budgets and cash flow as if those two are synonymous. They're not, but they do have some things in common. The analogy I use is that cash flow and budgets are like time and schedules. Time just happens. The sun comes up, eventually it's going to go down, and you have some certain number of hours in between. Cash flow is the same way. It just happens. You have income, salary or wages, and maybe some income from other sources. And you have bills, housing, transportation, food. In your life, money is on the move. And just as sure as the sun will rise and set, that movement is going to happen, whether you try to make sense of it or not. A budget is your attempt to do just that. Just like you make a schedule for your day, deciding where you need to be, when, and how many hours you plan to spend doing this or that. A budget tries to do the same thing for your money. And just as you do not have to make a schedule, the day will happen with or without one, just a little more chaotically. Likewise, you don't need to make a budget. Your cash flow is going to happen anyway. Your money will be on the move. However, likely with that same chaos. So, why would anybody not make a budget? My guess is because budgets can be so discouraging. And like having been on one too many diets that failed, when budgets fail, it can be tempting to just give up. However, doing so is about guaranteed to result in your own personal financial chaos. So, let me suggest another option. I'm going to go through 5 reasons why budgets often fail and a suggested solution for each. So, here goes. Number 1, many budgets fail to account for all of your expenses. One of the first documents that I ask new clients to fill out is a form I call the Cash Flow Questionnaire. I'll put a link to it below. It's a spreadsheet and you are more than welcome to download a copy. It's nothing sophisticated. But it does list most of the typical expenses that I expect my clients to have. There are 2 things that are missing. The first is federal and state taxes, and the second is any savings they might be making into account, such as 401ks, IRAs, 529 plans, and the like. Of course, this isn't the only document I gather from my clients, so I get that information from other sources. As you go through this questionnaire, there are some expenses that you are going to find it easy to list with great accuracy. Things like your mortgage or rent, your monthly cost for internet service or your cell phone. Even things like your electric bill or groceries are likely not that terribly difficult. This is because these are recurring expenses that are either the same each month or don't vary by much. Where your budget is going to go wrong is in estimating your cost for things that are not recurring monthly expenses. Things like how much you spend on clothes, entertainment, or 2 of the biggest underestimated expenses, maintenance costs for your home and automobile. This creates the number 2 reason why budgets fail. These are what we call non-linear expenses. Expenses that are not the same each month, maybe not even the same each year. The solution is to identify these items and accurately reflect them in your budget. So the second reason why budgets fail is underestimating or ignoring nonlinear expenses. I get so many cash flow questionnaires back from clients that will have numbers for expenses like clothing or maintenance costs that are completely unrealistic. Some people tell me I don't really spend money on clothes. Well, maybe, but I've never had a client show up to a meeting naked. You have an expense there, and you need to know what it is and account for it. A bigger offense is the maintenance costs of your home or car. Frequently, that gets reported as zero or with some very small number. Never having been in your home, I can tell you some things about it. It has appliances, a refrigerator, a stove, washing machines for both clothes and dishes. Machines break occasionally and need to be either repaired or replaced. It also has a furnace and maybe an air conditioner. There's probably asphalt shingles on the roof, and many of the floors are likely covered in carpet. All of these things have a life expectancy, and when they wear out, they are expensive to replace. Tires wearing out on a car is neither unexpected nor an emergency. Cars need new tires about every 40 to 60,000 miles. Failing to recognize that and account for it in your budget is another big reason why your budget might fail. Given how expensive maintenance costs can be, I think it is most critical to get this right in your budget. The solution? Get an accurate estimate for these expenses. Do some research. Websites such as AAA, HGTV, NerdWallet, and others can provide you with guidance. You are going to find that the cost of maintenance is a big number. Suggesting that you set aside 1 to 3% of the value of your home each year for maintenance costs might not be out of line. But remember, this is a non-linear expense. You might have several years without really having a major maintenance cost, and then boom, you need a new furnace or air conditioner or a new roof, and it's going to cost several $1,000s. Because of these non-linear cash flows in your budget, proper budgeting is going to result in you having different levels of cash on hand. This could be a problem. It might cause you to feel wealthy when you really are not. Possibly you simply have a major expense looming that you've been building cash for and you just haven't experienced it yet. This results in the third reason why budgets fail: poor accounting. It happens when the dollars that you are setting aside for this or that expense get lost in your overall budget. The solution for this? Get a home accounting system. Businesses hire professional accountants to, among other things, keep track of their cash flows, and they pay them well. You need to be the CPA of your household. Some of my clients set up multiple small accounts dedicated to this or that purpose. I'm not a huge fan of this, as it can sometimes lead to unnecessary expenses at your bank. However, if that's not the case at your financial institution and it works for you, great. Another solution would be to simply get one of the many software programs for household finances and take advantage of the options that are likely built into that program to account for and track your dollars. The fourth reason budgets fail? True financial emergencies. You've already learned that some things that people view as emergencies are likely just uneven cash flow expenses, car tires, or a furnace that needs to be replaced. That doesn't mean that true emergencies do not exist. Many, if not most, of your insurance policies likely have a deductible, an amount that you need to pay before your insurance company will. This is a type of self-insurance, and the things that we insure for are things that we do not expect to happen. That's actually what makes them insurable. However, if the unexpected happens, you need to be ready, and therefore you need to have cash on hand to pay your share of the expense. Another true emergency? The loss of a job. Losing your job and then having to replace it is going to take time, and meanwhile, that lack of income is going to wreak havoc on your budget. So, how do you handle a true financial emergency? The answer is have an emergency fund. You should have 3 to 6 months of after-tax earnings set aside to be ready for events such as this. This money should not be invested in the market. Job losses frequently occur when economies take a downturn. If you have your emergency fund in the stock market, it is likely to lose much of its value at the very time you need it most. I would suggest setting this money aside in either a money market fund or maybe a limited maturity bond fund. These assets remain fairly stable and therefore will be there if and when the dollars are needed. The last reason why budgets fail is this: they are too frequently ignored. If you do a good job with the previous solutions, especially numbers 1 through 3, your budget is going to tell you something. It is going to tell you how much your lifestyle costs. Maybe it'll be good news. Maybe you will discover that you are living well within your means. If so, good job. However, realize this: there are some additional expenses that also need to be addressed. Some amount of your income needs to be set aside as savings for your eventual retirement. And if you have people in your life that are financially dependent on you, such as a spouse or young children, you need to be paying the expense of being properly insured so that they would be taken care of should something happen to you. But if in making your budget you discover that ends simply do not meet, the solution is make hard decisions. A budget can only be fixed in one of two ways. Either you make more money or you spend less. Those are the only two options. Possibly you need to increase your income, a better paying job, or a side income, such as a second job. Or maybe the house you live in or the car you drive is simply not realistic. The fact is, when budgets deliver bad news, you need to act. Failing to do so likely means, financially, you are on a dangerous road. I'm Jeff Drayton. Thanks for watching. Hey everyone, as always, nothing in this video is meant to be specific advice for you. Advice like that can only be had by working with a financial planner, someone who knows you and your situation. I would encourage you to seek out someone who is a certified financial planner. This is signified by the letters CFP with the registered trademark sign following his or her name. I would also encourage you to work with a fee-only financial planner. Now that's two words, fee-only. Not fee-based, not fee plus commission. Both of those terms mean that the planner or advisor can receive commissions and is therefore not free of the conflict of interest inherent to commission sales. Again, I'm Jeff Drayton. Thanks for watching.